Welcome back to the channel, everyone. Today I'm going to walk you through something that most people in America avoid until it's too late. Yet it's one of the most important financial decisions you will ever make. How to choose the right life insurance plan in the USA, step by step, without confusion, without pressure, and without getting lost in industry jargon. So sit back, relax, and let's simplify this once and for all. When people think about life insurance, they often imagine long paperwork, complicated terms, and pushy agents. But the truth is, choosing the right plan is not just about buying a policy. It's about protecting your family's future, creating peace of mind, and making a smart financial move. The very first thing I want you to understand is why you actually need life insurance. Life insurance is not for you. It's for the people who depend on you. If you have a spouse, children, aging parents, a mortgage, student loans, or even a small business, life insurance makes sure your responsibilities are covered even when you're no longer here to manage them. Think of it as the last gift you leave behind financial stability when your loved ones need it the most. But the question is, how do you choose the right plan? The number one step in this process is understanding how much coverage you need, and this depends on your income, debt, lifestyle, and goals. A simple rule that experts in the USA recommend is buying coverage that is at least 10 to 15 times your annual income. So if you earn $50,000 a year, you should consider a policy somewhere between $500,000 and $750,000. But of course, this is just a guideline. For some families, even $200,000 could make a huge difference. For others, especially if they have a mortgage, college costs, or business loans, $1 million might be more suitable. The next step is understanding the two basic types of life insurance in America: term life insurance and whole life insurance. Term life is simple, affordable, and designed to protect you for a specific period, 10, 20, or 30 years. If something happens to you within that term, your family is financially protected. After the term ends, the policy expires unless you choose to renew it. This is the plan most Americans choose because it gives high coverage at a low price. Whole life insurance, on the other hand, covers you for your entire lifetime and includes a cash value component that grows over time. It's more expensive, but it's also more flexible because you can borrow against that cash value in the future. The important thing to understand is that neither option is universally better. It completely depends on your financial goals. If you want affordable protection to cover major responsibilities like your kid's education or your mortgage, term life makes the most sense. If you're looking for lifelong coverage plus a savings element, whole life may be the better option. Once you've decided on the type of insurance, the next step is comparing quotes from multiple insurance companies. The USA has hundreds of insurers, and each one evaluates risk differently. That means the price for the exact same coverage can vary significantly. The good news is that you don't need to call each company individually. You can use online comparison tools or independent brokers who show you prices from numerous companies at once. But when comparing insurers, don't just look at price. Also, check each company's financial strength rating. Companies like AM Best, Moody's, and Standard & Poor's rank insurers based on how financially stable they are. You want to make sure that the company you choose will still be around decades from now when your family actually needs that payout. Now let's talk about riders, because riders can make your policy much more powerful. Riders are optional add-ons that provide extra benefits. Some of the most useful riders in the USA include the Accelerated Death Benefit Rider, which allows you to access part of your payout if you're diagnosed with a terminal illness. The Waiver of Premium Rider, which covers your payments if you become disabled, and the Child Term Rider, which provides coverage for your children. Riders cost a little extra, but they can offer tremendous value in difficult situations. Once you've explored riders, the next step is completing the application. This usually includes answering questions about your health, occupation, lifestyle, and family medical history. Some plans require a medical exam, while others are no-exam policies designed for convenience, although they typically come at a higher price. When filling out your application, honesty is extremely important. Life insurance companies verify the information you provide, and any inaccuracies can lead to denied claims later on, leaving your family unprotected. The next step is reviewing the final offer. After your application is processed, the insurance company will send you a policy offer. Sometimes it matches the quote you were shown. Other times it may be slightly higher or lower, depending on your health assessment. Before accepting, read the details carefully. Double check your coverage amount, premium payments, rider selections, and term length. Make sure everything is exactly what you want. Once everything looks good, you make your first payment and your policy becomes active. But choosing life insurance doesn't end when you buy the policy. Life changes, and your insurance should grow with you. Many financial advisors suggest reviewing your coverage every 2 to 3 years, especially after major life events like marriage, having a child, changing jobs, buying a home, or starting a business. Updating your life insurance ensures that your family stays fully protected no matter what changes happen in your life. And finally, one of the most important parts of choosing the right plan is communicating it to your family. Make sure your spouse, children, or trusted relatives know where the documents are kept, which company your policy is with, how much coverage you have, and who to contact if something happens. This simple step can save your family from unnecessary stress during emotionally difficult times. At the end of the day, choosing the right life insurance plan in the USA is not about fear. It's about confidence, clarity, and responsibility. It's about taking control of your family's future before life surprises you. So if you've been putting off this decision, let this be a reminder that the best time to secure your family's financial future is now. Thanks for watching, and if you found this guide helpful, make sure to subscribe for more powerful, easy to understand financial content.